Hi there, Aaron Dunn here from Smarter SMSF. In this video, we're going to take you through the release of our above temporary minimum pension election. So this form is where a member for either the 2019-20 or the 2020-2021 financial year is going to take an amount that is greater than the temporary 50% reduced minimum pension, and they may therefore elect to take such amounts from either the accumulation account, assuming, for example, they may have an amount greater than $1.6 million, or they are potentially looking at clawing back part of their transfer balance cap as a partial commutation. So you can see on the screen here at the moment, we've chosen our Smith SMSF, and what that will do is then populate the information that is available inside Simple Fund 360. Now, a quick little tip here, we can see that that address has been populated and validated. I usually just request that you go in and do that last little bit there. What that'll then mean is that it now is available in the trustee address in a drop menu as you work through the screen and include, for example, the trustee meeting address there. We have John and Jane Smith. We'll have John as the chairman, and we can, of course, select our meeting date. This next page then is really helping to identify who this income stream recipient is, their particular details, and the financial year. In this instance, we're applying the 2021 financial year and the pension that this specifically relates to. Now, you'll see here we have a tooltip across both the account-based pension name. This will become very relevant in a second, and then also in terms of how this needs to be treated. Now, what we're doing here, and the reason why this document is so important to be done at the start of the financial year, is that this is following the guidance that the ATO set out in TR 2013/5 and followed up in Practice Compliance Guidance PCG 2017/5 around what is a valid commutation. So where this decision to commute is made, it does need to be prospective. And again, with the introduction of the transfer balance cap, the Commissioner was very clear in that practical compliance guidance that we needed to have a member's request and trustee acceptance prospectively done before such commutations could actually occur. So what we're doing here is we're following strictly what the guidance has been, going back to 2013 around when a pension commences and ceases here, and then again following the guidance that the ATO had put out for SMSS through the introduction of the transfer balance cap and those that had pensions that we're looking to commute. So we'll have here the account-based pension number 1 or number 2, whatever that is that you want to reference. And then what you are identifying here is how you are going to treat those payments that are above the reduced minimum for that particular financial year. So in this instance, if you've got a client that has, say, $3 million in benefits, 1.6 or a bit more, let's say, that is in pension phase, and then the rest is in accumulation, then you are simply electing here to treat any amounts above the minimum as lump sum payments. Now, you will then naturally prepare the lump sum payment documents at that point in time when you do the physical withdrawals, but this is a prospective decision that's been made. If you are looking to do a commutation, then what you would be doing here is you are then prospectively nominating the income stream from which those commutations are to occur. Again, a key requirement that had been set out within PCG 2017/5. So what I'll do here, you can tick both because you might be running out of that accumulation account by virtue of the amounts that would be taken during the year. So we go down. If we are doing a commutation, again, we've got a reference there for the specific clause that is within the Smarter SMSF deed that would allow for that commutation to occur. And then we simply have the ability to review that documentation before we submit. Now, the one thing to note here, you will see that where you are ordering this on a pay-as-you-go basis, you would then just need to complete the credit card information in this field here. Otherwise, as a person that has a subscription, this credit card information would simply not appear, and you would click order now. So what I'm going to do is just pause the video there. I just wanted to show you that credit card information as well. I'll submit that order and then show you what that looks like as you can then start to implement. Okay, so we now have our completed order for our COVID above minimum pension election here. So you will get this via an email, but also it is available to download within your completed orders area. So what we have, as I mentioned throughout the video, is the member's request and then trustee acceptance from which this benefit payment is to come from. So in this instance here, we were looking at a commutation only. And here we noted that it was being taken from account-based pension 1 and that the member is intending to only withdraw the reduced minimum for that particular year. And any further amounts would therefore be treated as a partial commutation and then, of course, deducted as a lump sum payment that would need to be reported against the transfer balance cap. Importantly, PCG 2017-5 also made it clear around the request and the fact that they're doing it willingly and would not revoke or alter that at a future point in time that would then invalidate any such request for a commutation as well. We then have our resolution, which goes through the priority of cashing, also looking at the fact that that request has been made, the powers to commute, the requirements for transfer balance account reporting, and then when the actual commutations occur or those payments at a future point in time, you would simply need to produce the additional commutation documents at that point. We then have our notification as well around that particular request that has been put in. And we have also provided a summary of the guidance that is required, subject to whether the individual is simply going to take those above reduced minimum amounts as pension payments, whether they're going to take them from an accumulation account, or whether they're going to comply with the outlined requirements in PCG 2017-5, where they are looking at a commutation with that payment. So that is the COVID-19 above reduced minimum pension documentation. If you do have any questions in respect to this documentation, please feel free to reach us at team@smartersmsf.com. I encourage you to be getting onto this information early. We do know this year that there is a reduced minimum obligation, so your clients will obviously hit that reduced minimum much quicker than they would in previous years. So the prospective nature of getting this documentation done and done early is absolutely paramount. Thank you and bye for now.